Hello, ladies and gentlemen. Greg McCloskey from Forex Live with the Forex Quick Look at the Euro versus U.S. dollar after the U.S. jobs report, which showed much stronger growth. We are seeing yields move higher about 4 or 5 basis points in the 10-year, but stocks are also moving higher with the NASDAQ index now trading up about 0.95%. The S&P is up 0.63%. As for the U.S. dollar, we saw the dollar move higher initially, but now coming back a little bit. In this video report, I'm going to take a look at the euro versus U.S. dollar. Focus on it from a technical perspective. So let's get started. It is also Friday, so Friday we like to do, take a look at not only the week, but also what's ahead. And we started this week off by moving to the downside in this currency pair. I'm looking at the daily chart here, and that move to the downside came into this swing area. The swing area had a number of different swing lows a few weeks ago, and here. Then we had swing highs through here that all came between the 1.0694 and 1.07358 level. Yes, it says 40 pips or so of room in there, but we had also moved below this trend line, and that was more bearish. And we came down to the next area on the daily chart, found support buyers within that area, and started to rotate back to the upside. Getting back above the broken 38.2% retracement of this move to the downside, and then extended all the way up until the price hit the 100-day moving average in trading yesterday, and that's where things said, whoa, and the data today sent the price back down, coincidentally or not, to the old trend line. That old trend line, let me get rid of all those arrows there, connects this low to this low right here. We did come down to that area through here before breaking below it earlier in the week, and then returned back to the old trend line right here and found support buyers against that level. So, that sort of makes sense. So going into next week's trading, what do we have on the daily chart to look forward to? Well, on the top side, needless to say, the 100-day moving average did hold resistance. We did get above the 200-day moving average, but both those moving averages would need to be broken in addition to the 50% of this move to the downside. So there's a big cluster of resistance between 1.0831 and 1.0863. So that's sort of our 30 to 40 pip range on the top side that we need to get above to increase the bullish bias. On the downside, the same, again, below the trend line, getting back below the broken 38.2, and this swing area down here becomes the next key target. That's our 40 pip range on the downside that we'd have to get below to increase the bearish bias. So these are the areas of significance going into the next trading week. Continuing today, we need to either get above that level to increase the bullish bias, or move below this level to increase the bearish bias. So now let's take a quick look at the hourly chart to see if that's telling us any little secrets here for the shorter term. And what we can see is that the sharp move to the downside in the first minutes of trading and into the first hour of trading, I guess, that took the price out below the 100 and 200-hour moving averages. That should have ignited more selling pressure to the downside. Initially, it did modestly, but then the market has since started to rebound back to the upside. So shorter-term traders who would want to buy a dip, this area right through here is the level that we've been looking at for at becoming a bias-defining level. If it trades above, it's more bullish. If it trades below, it's more bearish, and we are back above it, as you can see on the chart. All these levels come in play through here. So be aware, be prepared of this area right through here between 1.0795 and 1.08036. Also above and below the 108 level, which is always a nice thing to do. Here's our 200-day moving average. Here's our 100-day moving average. Need to get above both those levels to start to increase the bullish bias. And all right, so that's my look at the euro versus U.S. dollar after the U.S. jobs report. A detailed look that could take you into the weekend, into next week. My name is Greg McCloskey. Good fortune trading. Bye-bye now.